So in my day-to-day life, I'm a trader, I'm a content creator, and I'm part of a high-functioning quant research team here at MarketFeed. So since I'm a content creator, a lot of people come and talk to me about their trading journeys. And I was trying to understand why still many people make losses, okay? And I wanted to make a video on how you can tackle or how you can become a profitable trader. I know that's what everyone needs to know about and everyone wants to know about. And one of the major reasons when I looked into why a lot of people are still making losses is that they do not have a clear trading plan. Okay, that's one of the major reasons, and that's something that I want to tackle with this video. So let's get started with the agenda for the video. Here we are starting the screen share portion. So you'll get a detailed view of the importance of a trading plan, the key components of a trading plan, the importance of setting clear goals, risk management, developing a strategy, and reviewing and adapting for it. Okay, so these are all my learnings after both being a trader here at MarketFeed, being a content creator here, talking to a lot of people by virtue of it, and also MarketFeed being a firm or a company that develops quantitative trading strategies. I wanted to present to you a very in-depth but still simple list of points that you can easily start implementing in your trading life. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to MarketFeed. So these are the agenda points for the video. As we talked about, we'll be going through this one by one, and I'll try to keep it very simple so that it'll be very easy for you to understand. And I'll try to give you examples in between so that you can train your mind in order to think like it. So let's get into the first slide. One, what is the importance of a trading plan? The statistics say that 70% of traders lose money without a plan. Okay, so out of all the traders losing money, still, the right statistic says that 90% of traders lose money in the market. Okay. And inside that 90%, 70% of traders lose money without a plan. So always, even if you have a plan, there is a chances that you will go into a loss. Okay. That is, having a plan won't save you from losses 100%. Okay. That is not the case here. But out of all the loss making traders, 70% of traders lose money without having a plan at all. That's something that you really have to understand. Okay. And two, having a trading plan will help you avoid emotional trading. So if you're just waking up in the morning and you're going to sit in front of your computer or your phone screen and you see random opportunities and you click on the buy and sell button randomly, yes, you might make some money for one or two trades, but over the long term, even over the course of 1 week or 1 month, I'm sure you'll end up in more losses than profits. Right. And that's what you'll have to stop. You'll have to stop emotional trading without any plan or any direction at all. You'll have to stop that. And this will definitely help you with it. Three, a trading plan. You have to understand that a trading plan is equal to discipline plus consistency. Not having a plan at all is one bad thing, but having a plan and not following it with discipline and consistency, that will also lead you to the same outcomes. Okay. So you have to understand all this really well. Okay. So then let's move ahead. Two, key components of a trading plan. Again, I've broken this down into very simple, easy to understand points. First thing, goals should be specific, measurable, and realistic. No matter what you're doing in life, if you're setting clear goals, which are specific, measurable, and realistic, I'm sure your probability of hitting those goals, because you know what is the end goal, you'll be taking actions or initiatives in order to reach that goal. Okay, I'm sure you'll be much better off. Even talking about this YouTube channel, last year, if you're looking into our content and if you're looking into our channel in general, we did not have any goals at all. Okay, we just continued to keep on posting videos and we had the expectation that some people will watch it. But this year we made a very clear, dedicated effort to change it. And if you're checking out our views number this year and the subscribers added this year, it is much higher than any previous year. In fact, over the last 2 months, we have added more than 50,000 new subscribers into our family. So welcoming all of you here. And why or how did we reach there? We set a clear, specific, measurable and realistic goals for the YouTube channel. Okay. Similarly, for all your trading related goals and strategies, you should be having specific, measurable and realistic targets. Okay. And how do you set that? We'll get into that also. Two, risk management. Okay. which is capital protection. So we'll get into that also very deeply. 3, strategy. You should be defining entry and exit triggers. And 4, review. Learn from every trade. Okay. So out of the key components of a trading plan, these are what you should understand. Setting clear goals, having clear risk management, having a clear strategy, and reviewing your plan and strategy. Okay, so inside all of these or inside this playlist that I'm creating, I think I've already created this risk management capital protection video. I'll link it here. Okay, how to have a clear risk management policy in all of your trades. I've also shared what is a simple calculator that you can use to follow these risk management rules. I'll be putting that here in the I button. Make sure you go check that out. Okay, do not miss it at all. Moving ahead, trying to break down each of these 4 points. The first one, setting clear goals. Okay, goals need to align with your trading style, and it should also be reasonable. Okay, so let's say you're a swing trader. You coming and saying that you want to make 300% returns from the market this year might not be realistic. You have to understand that. So, being a swing trader, these are the goals that you can try to attack. Okay, being an option buyer, maybe this is a goal that you have to try and attack. Being an option seller, it might be everything would be different. And here again, we have created an in-depth video in the stock market A to Z series. Okay, and if you have not yet started watching that series, make sure you go check that out. It's one of our earliest videos. Sharik has made that video, and we'll soon be continuing and updating the stock market A to Z playlist as well. So get subscribed if you're not already. So hope you understood that. Goals need to align with your trading style. And inside that video, we've given clear demarcations. What should an option buyer expect? What should an option seller expect? What should an investor expect? So these are all different categories, and you should be having goals along the same lines. And 2, track metrics. Okay. So if you're not used to this, especially if you're in a corporate setup, maybe you'll be used to this logic, which is you have to track metrics, see what is working for you, check your win rate, see what is your current risk to reward ratio, what is your current max drawdown in your strategy or trading style. You'll have to analyze all of this and keep analyzing it. It's not like a one-time thing. But every week, every month after your strategies are done or your trades are executed, you have to go check out these metrics, see if it is still aligning with your previous goals that you had set up. Okay. So, we talked about how goals need to be measurable, realistic. You can even include these metrics as part of your goals. So even inside market feed, for all of our flagship strategies right now, which are Nova Edge, Nova Boost, and Nova Prime, we have very clear goals set. And sometimes it's not like all the goals will be easily hit, but we have an understanding of where we need to go and what all are the metrics that we need to track in order to reach that goal also we have clearly defined. Okay. And once that goal is clear, you'll take up initiatives and tasks in order to reach that goal. And that's a clear, amazing mindset that I want all of you to start training yourself in. Then let's get into the next slide, which is risk management, starting with the 2% rule. Risk should not be more than 2% of your capital per trade. Okay, so in our video there, where we had created that calculator, we have clearly gone through this. How can an option buyer look at it? How can an option seller look at it? And how can even a swing trader look at this? Okay, and we have created calculators for all of those cases. So make sure you go check that out. 2, diversify across sectors or assets. And even in your case, it can be diversify across different trading styles. Again, in my last video, I told you about a lot of very successful option buyers who are market feeds algo customers. And why are they doing it? So they have a winning strategy in their hand. And 2, they've decided to diversify their capital into multiple trading strategies, but they can't easily track all of the same. Right? So they've stuck with option buying on one side, and on the other side, they've trusted our algo trading service to deploy the rest of their capital. That's something maybe that you can also think about. I'll provide the link for the webinar. If you want to learn more about automated trading, I'll provide that in the description down below. Okay. Diversifying across sectors or assets or even strategies. That's something you should be thinking about. 3, using stop loss and position sizing. Again, I'll link that video there. Make sure you go check that out. Moving ahead, developing a strategy. Okay, things are getting more serious here. Now you have a You understood the importance of a trading plan. You understood what are the key points of creating a trading plan. You understood how to set goals. You understood how to do risk management. Next thing you need to have is have a clear strategy. Okay, have a clear trading strategy. Choose indicators based on your style. Okay, so again, in market feed with our quant research or quant research team, we have multiple indicators at our disposal. In fact, we have talked about this in one of our videos with Sharik. What is his favorite indicator? Okay, so we talked about it there. One of our favorite indicators or his favorite indicators there was PCR, put to call ratio. And we decided, or we looked at all the metrics and we understood that it was an amazing indicator that is working for us in a lot of cases. So we'll decide that it will be a parameter in most of our strategies. Okay, so take one winning parameter and try to make that your core or anchor. And similarly, at the same time, if you want to diversify, since we have a larger team, then we'll decide, okay, these are the multiple indicators that will be core for us. Okay, but for you, maybe it's an RSI. Okay, or a MACD or a super trend or even a simple multi-EMA view, right? Multi-exponential moving average view. That will be the working indicator for you. Okay, so make sure you set that up based on your trading style, on your if you're an option buyer, it could be different, option seller, swing trader, everything could be different. So make sure you understand your indicator based on your trading style. Then this is mostly, I would say, for systematic traders. Backtest your strategies rigorously. Okay, if you're a not a systematic trader, if you're a discretionary trader, I would say the modification that you can make here is forward test your strategies rigorously and do it with a small capital. Okay, so if you're someone who's going to trade with, let's say, 10 lakhs, right? Do not start trading or your trading journey with 10 lakh rupees. Start with 50,000. Try and test out your strategies and your theories, see if they are working, and only then deploy it, right? Deploy it into the live market with a larger capital. Similarly, for systematic traders, you can trust your backtest up to a certain extent, right? You have to test or do your backtest very rigorously. Then you can even choose to do a forward test as we do here in Market Feed. This will help you understand both the theoretical scenario and the real world scenario. Okay, it's not like the backtest will help you solve all of your problems. The backtest will help you understand how your strategy performs in different market conditions across the last multiple years. Okay, and this is something that you'll need to do really well. And the next point, define your setup. Okay, your entry and exit rules must be clearly defined. In fact, in one of our previous videos, I had given you a hint on how you can think of a strategy, right? And I told you there that our quant research team might not be really happy with me sharing that. But the thing that you have to understand here is you have to think of a signal, right, which can help you trigger that strategy. Then you have to think of multiple entry conditions. And then you have to think of multiple exit conditions. And even in the exit conditions, there might be happy cases where the strategy is going into profit and you're doubling down and you're trying to make profits. And there might also be not so happy cases or sad cases where the strategy is not performing well or going into loss and you have to exit them. Okay, so for both these conditions, you have to define clear exit rules. Okay, so that's one nuance or one nudge that I hope that will take you into the right direction of creating a winning strategy. Now moving ahead into the next point, which is review and adapt. Okay, one, maintain a trading journal. We have talked about this in our previous video also on how you can make a trading journal. Again, I'll add it here on the I button. I'll also add it to the playlist. Okay, so while maintaining a trading journal, it is very easy for you to recollect and understand what happened on a previous day. Did I do all the right things according to my plan, or did I make some mistakes and did I move away from the plan? Okay, if you're a systematic trader, maybe your numbers will help you. Okay, just your numbers. But if you're a discretionary trader, you want your profit numbers, your trading statistics along with your emotions at the time of trade. Okay, so I've given a very simple template in that video. You can go check that out also, right? And one thing that I want to say here, I've seen a lot of traders who, along with all of these trading plan, understand the importance of how their brain works. Or, okay, so if you're a trader, you're mostly using your brain power or your mental capacity to trade. You're not using any of your physical resources. You don't have to move your body. You're just sitting in front of a laptop in a room, right? But I understand that few of the winning traders that I've seen, they have a way of thinking or a way of training or waking up their mind in the morning that will help them become better traders. So some people that I've seen, they listen to music that will wake up their mind. Some people that I've seen, they go out, get sunlight, right? I've seen traders who are actually doing that, going out, getting sunlight, training their brain and their circadian rhythm to understand that it's a morning and they should be energized. I've seen some people have only coffee or have no breakfast until 2 p.m., right? So there are multiple variations, but do understand that you're supposed to invigorate or you're supposed to train or wake up your brain in the morning. And that's what you should be focusing on. Okay. So it can either be music, it can be your coffee, it can be getting sunlight, anything. But you have to understand the importance of that and you have to implement that in your daily trading routine. Okay. For some people, it is even reading the pre-market news and looking at the charts of different global assets and seeing what happens there. That will get their mind sorted or started. Okay. How did the Dow Jones or the US market perform yesterday? What was the price action there? Could I have done anything there in that trading scenario? So thinking about all of that also invigorates your brain. It wakes up your brain. So make sure you introduce that in your trading style also. Okay. So maintaining a trading journal, adding a sub point there, thinking about how you can wake up your brain and training your brain, especially in the mornings, analyzing your wins and losses. Okay. So the journey of trading is not going to be very easy or very smooth. Okay. There are always going to be profits. There are always going to be losses whenever you have profits. It's a eventuality that you'll have to see. Whenever there is something to gain, there is always some potential there to lose some money also. So you have to understand that. Okay. And you have to be aware of that fact and be open to learn from not only your winning scenarios, but also your loss-making scenarios. Often, losses are the scenarios or the situations which will teach you the most. Okay, why did you create that loss? Did you stray away from the trading plan or did you stick to the trading plan and the trading plan or the strategy itself did not work? Okay, that's something that you'll have to regularly analyze. And that links it to the third point, which is refine strategies regularly. So even here at marketfeed, the December month and this entire quarter, we have talked about this even in our previous podcast. It was not really great for us and our trading strategies. So we looked into why it was and we understood that a lot of metrics that we are regularly tracking, that we are very obsessed about, some need to be tweaked. Right. So we understood that and we decided to refine our strategies. And hopefully, even this week, we are in good profits, right? And hopefully going into the coming weeks also, all the refinements that we have done will help us improve our winning rate, will help us improve our profit percentage. So this is a mindset that we are working with. Understanding that trading is not going to be a simple game, keeping a strict goals and targets on where we want to reach, understanding and looking at the numbers very regularly and refining your strategies, understanding from both the wins and the losses and refining your trading strategies if required, right? That's the mindset that we are operating in. And hopefully you understanding or you getting that insight on how a high functioning, high performing quant research team and a firm works, right? Maybe you can get some pointers there, because just to give you that validation on why we think that we are the right people to give this to you, currently we are trading with a capital of more than 320 crore rupees. Okay. I'm not sure how many people in India are doing that today. Okay. So you need to definitely understand that we are coming from a point of really understanding what are the winning mindsets that you need to have, what are the winning metrics that you need to track, and giving you advice only based on that. It is not random gyan. So hope you got some real good value from this video. Our goal is to try and make you understand that it is not an easy game, but it is something that you can really get better at. Okay. And that's the goal of this entire video. We wanted to keep it very unbiased and try to give you as much information or insights as possible. And again, as I said, this is a beginning, or you can see this as one video of a multi-video playlist, out of which we'll be talking about each of these concepts in depth. So if you want to see more of these style of videos, let us know in the comments down below. Make sure you subscribe to the channel and watch our very recent podcast on algo trading regulations and what is happening to Asian Paints. Okay, I'm sure you love those two topics inside our recent podcast. So yes, this is Ajay Ajith signing off. See you all in another video. Bye bye.